Okay, let's get to our guest host this evening, Peter Churchouse, head of research and also managing director, Morgan Stanley. He joins us from our studios up in Hong Kong. Peter, good to have you with us. I guess the key event for markets is, at least to get it out of the way, would be next Monday, Mr. Blix's report to the Security Council.
Well, yes, of course, it seems to be the gathering pressure on the Iraq situation is really gathering against Mr. Bush at the moment, as we've seen from Europe, from Germany and France. So I think this is going to create a little bit more uncertainty on this issue over the course of the next week or so. And there certainly does seem to be a bit of a split developing between the Europeans and the Americans at this stage. So that, I think, could lead to further uncertainty on the Iraq issue over the next couple of weeks.
I mean, the security issues and geopolitical risks aside, fundamentally in terms of economics, I mean, consensus is for the global economy to start coming back this year. Is that your house view as well?
Oh, very much so, but we're expecting a modest pickup in growth this year, but a real re-acceleration of growth pretty strongly back at the back end of this year and into 2004, at last hopefully driven by investment in capital spending as opposed to consumer spending, which has really dominated the economic growth scenario over the last year or so. So we think that the focus of growth is going to shift from the consumer to the capital side before the end of this year, and really see a big pickup next year.
All right, and that is a good sign, because that last leg, CapEx, is what everybody's been looking for.
Absolutely, there's been a big drop in that area of the economy, and we've been fortunate in that monetary stimulus has kept the consumer alive and well, and really it's the consumer who's kept the global economy in a reasonably stable condition over the past 12 months. And at some point, the capital side of the economy has got to take up the running here.
All right, Peter, in terms of markets, who's set to outperform this year? Are we talking about sort of almost a reversal of fortune? Markets that did well last year, they're going to be laggards, and the ones that were left behind last year, they will come back.
Well, certainly in Asia, we're certainly expecting that. Korea was the darling of the markets this time last year in Asia, and was the best performing market in Asia last year. We think Korea is going to be an underperformer this year quite significantly. We expect a big drop in economic growth this year in Korea, really due to a tightening of credit and a tightening of the excesses that we've seen in the credit markets in Korea. And we're expecting that perhaps some of the tortoise markets of last year may in fact turn out to be hares this year. And we'd really look to Taiwan, perhaps even Hong Kong and China, and certainly Singapore in that grouping this year.
All right, great stuff. Hold that thought, Peter. We'll come back and talk more in just a bit. Our guest host this evening, Peter Churchouse, Morgan Stanley, from our studios up in Hong Kong. All right, Minnie, stay right there. I want to take this whole privatization idea a little bit more forward. Big oilies in Bombay have been another sector that's really been in play recently, betting on privatization going forward. Names like Hindustan Petroleum, Bharat Petroleum as well, on signs that the government is finally getting its act together and will push forward privatizing these two fellows there. Overall, privatization is a big theme for India this year, the market. One of the reasons foreign money is set to come back. At least that's the hope. Let's get back to Peter Churchouse now, our guest host. Peter, I understand that you're just back from India, went there with the Hong Kong Chamber of Commerce trade team, and one of the things you noticed was not just privatization money from there, but I mean, they need a huge amount of money overall to fire up or continue an economy growing at 8% a year.
Yes, that's absolutely correct, Martin. The central government wants to see an 8% growth target. They've been growing at around 6%, which is a very commendable performance over the last 8 or 10 years. But to get to 8%, I see that as a big stretch. And the big problem here that I see really is a big funding gap on the infrastructure side. There simply is not the infrastructure in India to sustain the sort of growth of 8% target rates. And I see a huge funding gap here of hundreds of billions of dollars, which I don't really see that the Indian administration really has a concrete plan to plug that infrastructure funding gap. So I think that's going to be the biggest constraint that I see on achieving these growth targets.
All right, hunger for capital there. Minnie, come in on this.
Right, Peter, just taking on from what Martin mentioned about privatization being the big theme, really. Now, going forward, the government has pinned a lot of hopes on the money that they will get from privatization. They haven't been able to meet it over the last 2 years in terms of targets. Now, going forward, a series of elections coming up, general elections next year. Given the kind of political stalemate that has happened over this whole issue of privatization, do you really think that the government will be able to realize some of the targets there?
Well, certainly you're absolutely correct. The privatization program, which the central government propagated a couple of years ago, really has taken a back seat. It's fallen off the back burner over the last couple of years through a lot of legal challenges and challenges at the state level, not necessarily at the national level. The national authorities really want to see this happening, but it's really challenged at the state level. Of course, we have seen in the last few days a very interesting ruling from the Supreme Court, which I think may well be positive, prove positive for kick-starting the privatization program again, particularly in the energy side. So if that ruling does come through as we expect, I think we might see over the course of the next 12 months a bit of a pickup on the privatization side, which really has stopped in the last 12 or 18 months. So we're quite hopeful that that will start to kick in.
Peter, I mean, flesh that out, though. I mean, you pointed out this whole tension that's been ongoing for so long now between the center and the states. I mean, what gives you optimism, especially after a trip down there, that this is going to ease much at all?
Well, quite frankly, you have to commend the Indian authorities for having achieved a massive reform and restructuring of that economy over the last 8 or 10 years. But I think at the end of the day, as investors, when you go to India, you come away with the overriding impression that, look, this is not a must-be-there kind of market. I know India sits in the shadow of China as far as emerging markets are concerned, but most manufacturers, most companies look at China and say, I have to be there. They do not have that same reaction about India. And the key issues here are not just the politics, but it's really the labor unions, the labor laws, the weak infrastructure. These are the sorts of things that people focus on when they look at India from an investment point of view. And I think it's going to be tough to attract the foreign direct investment that they'd like to see.
All right, Peter, got to leave it there. Good to talk to you, sir. Peter Churchouse, Managing Director, Morgan Stanley, our guest host this evening. Also, CNBC's Minnie Menon from Delhi.